We start off with what might be a turning point for the market. Apple rebounding after touching a 7-month low yesterday to end the day with a gain of over 3%. The stock had fallen nearly 12% for the week at its lows, but rebounded 6% since then. And the rest of the market came along for the ride. Take a look at the gains in the broader indices since Apple hit its bottom Thursday afternoon. The Nasdaq soaring nearly 6% itself. So as Apple's low marked the low for the market. Just the other day, Brian Kelly, we were talking about Apple hitting that low and what it might mean for the market. So we wanted to ask the same question. Does the inverse apply here?
I think it's probably for the short term, maybe a tradable bottom here, right? Apple was that leading indicator, especially when it broke through $150. That was kind of the big thing that the whole entire market was looking for. And so to see it bounce back is encouraging. But what's interesting is if you looked across the board today, we were up 4% in the NASDAQ. We were up multiple percent in other indices. It didn't really feel like this massive rally type of day and that everything was back together. So I think for the time being, do we have a tradable bottom? Probably, but things I'm worried about is you saw rates tick up a little bit. We'll talk about energy and oil a little bit later on, but that's a concern. So we're not completely out of the woods, but for the time being, maybe it's a tradable bottom.
Yeah, I mean, what was positive out of this week, Courtney, was that we did see people start selling what they loved, right? So Apple, Microsoft, I mean, all of these sort of big cap tech names that were touted as being relative defensive plays in this kind of market were also being sold, and maybe that was a good sign.
Yeah, I mean, I wouldn't be surprised if we're getting pretty close to a bottom here. I don't know if this is the bottom itself. I think just kind of anecdotally, we usually get a few clients who actually panic out. I haven't seen that yet. People are getting impatient, but I don't think they're quite panicking yet. But I do really want to look at over the long run here. I'm not really of the mindset that we have a recession right in the near future here. I think the economy is still in a good standpoint. Profits still look really well. Corporate and personal balance sheets are still looking really strong. So is today the up from here? I hope so. I honestly, I think we might have a little bit of ups and downs from here, but I think we're getting close.
What did you make of this rally, Guy? I'm curious because I feel like you would come to this with some degree of skepticism.
I'm constantly skeptical. And I know, Mel, because I've sat next to you for so many years, you take copious notes. I don't know what copious means. I just know you're supposed to say it in front of notes. And you've been taking a note saying we thought collectively that Apple should trade down to 138, that October low. Got down to 138 yesterday. We talked about it last night on the show. I think the bounce today was justified. It probably has room up to 160, which would be a 50% retracement of yesterday's low and the all-time high. I think it all makes sense. But Apple's not impervious to valuation, and quite frankly, at 25 times next year's numbers, it's still an expensive stock. So until that gets down to a more reasonable valuation, I don't think it's over by any stretch.
Yeah, Tim?
Babe Ruth was the Sultan of SWAT. I would call Apple the Sultan of Swing in a market where, clearly we need to see this largest market cap move lower. By the way, Saudi Aramco this week became the largest company in the world. So what's disappointing for market participants, I think, is that Apple has only just started to underperform the market. In fact, I think it's underperformed the S&P. And despite a rally back off of those lows, I kind of feel that we need to challenge this. Again, I'll reiterate, Apple, much like many of the companies that have reported earnings so far, earnings season was fine. We heard a little bit about gross margins. We heard a little bit about supply constraints. We definitely have heard about inflation. Those are reasons we're paying less for stocks. Also, that rates are significantly higher or going higher. What we haven't heard is a pullback in demand, and that's phase two of this. That's phase two. That's the consumer. That's dynamics with a world that we just need probably one or two earnings cycles to get to. So this was an important week and certainly an important close to the week. But I'm not sure that this is what everybody needed to see I'll go.
By the way, if you're playing the Dire Straits drinking game at home, we might have missed Tim's reference to Sultan of Swing, so you're behind. Brian,
we don't get to play that game here? Only at home?
I thought you were. He's got a bottle of something next to him. In terms of, Brian, like, Dan came on the show yesterday and said that he was starting to leg into a Q's position.
Yeah,
that it was an interesting time to consider that. He's not completely, pounding the table bullish, but it's time.
I think we've priced in a lot of stuff in the market, right? We priced in probably a hard landing. You've got yields, even though they ticked up a bit, they are lower than they were at the beginning of the week, so that's a positive. There are some positives out there, at least for, like I said, a tradable bottom. I think the real question then becomes, what does this look like? Is it off to the races and we're back in a bull market? I don't think that's the case at all, but you could get a wide range. So Guy talked about Apple going up to 160. You know, you trade Apple 140 to 160. That's a pretty good range to trade, and we might be in that for a while. So you might have to adjust your investment style or your trading style to more of a range trading style rather than, okay, we're back in the bull market and you just buy every dip.